Well, thank you for joining. Give us a little time while we're giving people an opportunity to jump on the webinar, and we'll start in about a minute. Well, thank you for joining our webinar today. Can you retire successfully investing in gender equality? Hopefully that's not too big of a clue of where this is headed. And because I am a registered investment advisory firm, we have to always tell you that what we're talking about today is not advice, it's actually education. So please think of that in that light. But of course, we would love to talk to you further after this and take it to a level where it might become advice. In addition to being the founder of the firm, I'm also a personal finance contributor to Forbes.com. So I just thought I'd let you know, in March of 2022, I wrote something very similar to today's title, Can Women Really Retire Comfortably with Index Investing in Gender Equality? And who knew that I would have some of the folks on today that can help answer that question in even a deeper fashion than the article talked about. I'm going to start with the wonderful panel that we have today. We'll start with Carolyn Szaflik. She's a portfolio specialist at Morningstar, responsible for communicating the firm's investment philosophy, process, and strategies to clients and people like me. She serves as a liaison between the portfolio managers and the firm's clients. She's been in the industry for 28 years. She's worked for TIAA and Northern Trust Asset Management, and holds a degree from the University of Illinois in finance. Oh, the one that's in Champaign. That'll be important later. Then we have Ethan. I'm going to do an interesting zigzag here. Ethan Powell has spent a couple of decades in financial services, primarily in hedge fund and private equity. He serves as the principal and chief investment officer of Brookmont, and he's the founder of the nonprofit affiliate Impact Shares. See the logo. And he serves as the chairman of the board for a $3 billion mutual fund complex and was finalist for Mutual Fund Director of the Year. He's had some other background, but I like to highlight that he's earned the right to use the Chartered Financial Analyst designation and is a licensed certified public accountant. He's got a couple of degrees from Texas A&M. Jill O'Donovan began her career as an attorney, focused on aviation and insurance coverage disputes, before making a big pivot to join the YWCA Metropolitan Chicago in 2016. And since she's been there, she's led the organization's partnership with nonprofit investment manager Impact Shares to launch the Impact Shares YWCA Women's Empowerment Fund. And she has earned a law degree at the University of Iowa. And then we have Corrinne, who's the Associate Director of Client Relationship Management at Ethic, which is a technology-based asset management firm. She, similar to Ethan, is also a certified public accountant and a chartered financial analyst charter holder, and has worked for several firms before. And has a undergrad degree from Duke and earned a Master of Accountancy from Vanderbilt. I am James Brewer, founder of Envision Wealth Planning. We're a holistic, comprehensive financial planning and values integrated investment management firm. My undergrad was at General Motors Institute, which is now known as Kettering University, and I have an MBA from MIT. And unlike, I think, all of the other presenters, none of my alma maters is in the women's or men's NCAA tournament. So, so you can all tell me which one I should be rooting for because I have no affiliation in this tournament. So it makes it easier just to watch games and just root for a good game. So here's today's agenda. I'm going to tell you a little bit about the institutional investing process that we use here at Envision, and then how through that process we ended up finding out about Morningstar and the Impact Shares and Ethic. And then each one of them will kind of tell you a bit more about what they're doing in the industry that is, I think, extremely unique, and most people have never heard of some of the things that they're actually doing. So at Envision Wealth, we believe that the best way to actually determine your investing is to start by qualifying and quantifying your goal. If your goal is 5 years out, or if your goal is 20 years out, and depending upon how much money you can save based upon where you want to get to, that actually informs how you should invest, or another way to say it is how much risk and return you should be trying to target. So there's a thing called asset allocation, but I like the term investment recipe. So a lot of us who cook, or maybe you have a book and you turn to a recipe and you put this percentage of that and that percentage of that, but you don't like just kind of throw it all into a pot and put it into an oven or a pan and expect to have good results. So we want to do something that's a little bit more elegant than that. And we refer to that as risk-adjusted return enhanced. So that process, and it's an acronym RARE. And from what I've talked to many clients and prospects, most people haven't really heard of that. So to me, that's rare in its own right. Now, then once we have the recipe, then we turn to, well, how or which ingredients should we be putting into it? So if you go to any grocery store, you could either decide that you want your spaghetti sauce from just a container. I don't want to give any firms, but like there's different price points and the sauce is already done. Or you could decide that you want to create it from scratch. I've tried that approach a few times, but you need usually a lazy time on Saturday or Sunday because it takes a while. So, but you always need a recipe, and different people might think that one recipe is better than another, but at least that's how that all comes together. So today we're going to be talking about how one might decide, especially here in Women's History Month, that if I want to think of companies that are actually promoting women, and I always think of the income gap that we hear so often, maybe the way we're spending or investing actually might be, with companies that are actually making this worse or not actually trying to help it. Maybe some are neutral, but definitely not trying to help it. So we do both investment research that is of a quantitative as well as a values perspective. And we actually use values on the Morningstar side, but today we're going to hear a bit more about the side that has to do with their women's empowerment research. So I'm going to turn, oops, that was an oops, and work on stopping my share and turning things over to Carolyn.
Great. Let me make sure I'm up and running. Thank you so much, for everyone joining this call. Thank you, James, for having me. I'm very excited to be really with such an elite group of co-presenters on this call. So what I wanted to do today is to kind of first set the stage for, who is Morningstar? And for those of you that may not be as familiar, we are not the veggie burger company, so I'm going to set that straight right away. But we were founded over 40 years ago. Really, if you think back into the mid 80s, we didn't have the internet. We didn't have cell phones, and yes, we've all survived. But our founder really recognized a need for empowering investors to reach their financial goals. And so back then, if you wanted to do research on mutual funds that were coming out in droves, you had to pick up the phone and call, and they would mail you a prospectus. And so he really focused our firm on how to help that individual investor be able to decipher different types of investments. And so fast forward to today, we're celebrating our 40th anniversary this year. We're a global organization, and we were founded as that large independent investment research organization. And that really is the foundation for everything that we do across our organization. I work on the investment management side. So I work with James and other advisors who are doing that same thing, trying to help empower you, the individual investor, to reach those financial goals. So I'm really excited to talk about our Women's Empowerment Index. As you can appreciate, we're a very large organization. I'm on the investment management side, as I mentioned, but we have an index business that's been around for over 20 years. And that's really where this index is. Morningstar Women's Empowerment Index was created over 6 years ago, and is available to be that index that's now being used for different types of investment options that I'm going to talk about today, along with some of my colleagues here on the call. So what is this index? So basically what we do is we start with the US large and mid index. So think of large and mid-sized companies. So you're looking at hundreds, if not thousands. And then we're going to apply some type of a criteria. So we're going to automatically exclude. So these companies that are involved in weapons, gambling, tobacco are automatically going to be excluded. We're going to look at any companies that have some type of a legal, be it a judgment or an official ruling or cases that have been brought against them regarding gender discrimination or sexual harassment. So again, we're kind of funneling, we're starting with that large kind of everyone's eligible. Then we're funneling and kind of narrowing down the companies that actually are eligible to be in this index. So starting with the criteria of weapons, gambling, tobacco, legal judgments, legal cases, anything pertaining to, again, that company regarding gender discrimination, sexual harassment, anything, how that applies within marketing or advertising practices. And then we look to Equileap, and I'm going to talk a little bit about them, but their gender equality score. So then we're going to look and select the top 200 companies that have that highest score. And so when you look at the Equileap gender equality score, it's really going to be driven by 19 criteria across 4 somewhat broad categories. And I've listed them here. So we're looking at different criteria within gender balance and leadership in the workforce, equal compensation and that work-life balance that I know we all strive for. How is the company promoting any type of gender equality policies? And then what is their commitment to really being able to showcase that, to be transparent, and then most importantly, to be held accountable for it. So Equileap as an organization is assessing over 4,000 companies globally, right? So this is going to be US based, the index itself. So again, if you take a look here, you see the kind of 3 different main categories. And so different types of indicators that you see here might be, what's the balance of senior management relative to, the company's workforce makeup. What are their policies around paid maternity leave, paternal whatever leave, anti-sexual harassment policies? Are there women on the board of directors, right? And so again, we take a look, we rank all of these companies, and then this index, this Women's Empowerment Index, is going to then select the best 200 or so scoring companies from all this information. We take a look and we rebalance that index annually. So there will be changes. It may not necessarily be set at 200. It might be, above or below. So one of the ways that you can invest in this index is through something called direct indexing. So what is direct indexing? And it's kind of what the name implies. You're investing directly in that index, so that Women's Empowerment Index, but you're doing it by holding the companies in your own separately managed account. So it's personalized towards you. When you start within this investment, we have the individual tax lots for each of the holdings. And through direct indexing, what we're able to do is really we're able to reduce what we call your kind of tax liability in your portfolio. So what does this look like, kind of relative to maybe other investments that you're more familiar with? So again, it's looking to track that index, but then also produce some type of tax alpha, we call it. So something above what that index is returning, so that you don't have to pay as much. We're able to harvest losses when they occur automatically throughout the year. And so again, that tax liability you'd have to pay, we can minimize those gains by applying those losses. So here I'm taking a look at a mutual fund in the second column, an ETF in the middle column, and then direct indexing or investment in the separately managed account in the third column. And as you can see, this kind of gives you an overview of the similarities and the differences. So in each, you're going to be able to track that index. But with direct indexing, you're actually owning those underlying companies, as opposed to, if you look at your statement, you just see that you hold shares of the underlying fund. And then where it differentiates again is kind of what I mentioned for tax loss harvesting. And then the minimums, though, tend to be a bit higher because, again, we're trying to purchase 200 underlying companies within your account. So kind of in summary, direct indexing is going to mimic that risk and return of whichever benchmark you would choose. So in this case, it would be the Women's Empowerment Index. And then because of the ability to harvest losses throughout the year on an automated basis, thanks to technology, we're able to then add tax alpha. So again, you don't have to pay as much to the government taxes. I've yet to meet anyone that is happy to do that. So our portfolio, our Women's Empowerment portfolio, is doing just that, as I mentioned. So this is just giving you kind of that overview of what are the top 10 holdings across the 200 that are the highest holdings within the portfolio, ranked from their highest. So Amazon, Meta, Apple, these are all companies that you're familiar with. You know these names. You would be owning those names in your account. And then on the right, I just kind of show performance. And the whole goal of this portfolio is to track the performance of the Women's Empowerment Index. The above and beyond, or the alpha that we bring, again, is from being able to harvest losses across companies to offset future gains. So in summary, again, direct indexing allows you to invest in those companies that do have that high score from Equileap in a personalized manner within your own account, where you can actually see the underlying companies that comprise the index. So with that, James, I'm going to stop. Hopefully I'm within my time limit and pass it on back to you.
Well, thank you for that. Because I haven't looked recently, how does the Women's Empowerment Index currently compare to its parent?
I'm on mute again. Sorry
yeah.
about that. So it follows right in line with the index itself, as it should.
Okay. So I just wanted to say that because some people get concerned that if I start, removing 200 companies, let's say, from the parent being the 1,000, Morningstar large cap, that, well, maybe I'm losing something. But, as I have looked in the past, it was either close to, or if not, doing a little bit better than its parent index. And I think there are reasons why one could think through that, diverse teams or women-led companies, or let's say women's influence companies often might be better managed, and you're getting higher return. So thanks. So as I transition to Jill, you can take the share, and I'll just say a couple of words. So I was particularly excited to learn that there was this Impact Shares YWCA exchange traded fund, because one of the frustrations that some of my clients have, that they may not be able to have the $75,000 minimum amount to be able to get in the direct indexing solution from Morningstar, that there's another opportunity at lower dollar amounts for them to actually be able to access that same strategy. So I believe it was Ethan who had this idea, and there it lies how we got to the YWCA Women's Empowerment Exchange Traded Fund. So I'm giving it back to you, Jill. You're on mute.
I'll let Ethan start.
Okay, thank you, Jill. So JB, to your point, the woman fund itself, I'm looking at the numbers right here as of yesterday, a trailing 5-year has returned right at 18.5% versus the large cap blend category of 13.5, which puts it in the first percentile in the large cap blend category. So to your point, that woman factor is real and is generating what's traditionally considered as alpha, which is superior risk-adjusted return.
That's why there's more women than men on this webinar.
Right, because they're smart. I think in order to understand the woman fund, you have to kind of understand what Impact Shares is designed to do. So we're a 501c3 nonprofit SEC registered investment advisor. Sort of philosophically, going back to JB's analogy of dishes and recipes, philosophically, people really focus on two dishes on the table, which is risk and return. And while those are sort of the main dishes, we think there's a third dish that is social and environmental implication of your capital allocation. I would consider that the dessert, which is sort of at the end, but is everyone's favorite. And for us, this whole ESG greenwashing concept really kind of flies in the face of that concept, because we think that every dollar you invest, every dollar you consume impacts the world around you. And the question is, how intentional do you want to be with that impact? And it's with advisors like you, JB, that actually embrace that dessert dish and help your clients navigate dessert, and not just focusing on the two main dishes. That sort of leads us to where we are today, which is, okay, if you are going to assess the social environmental impact, who are the people, process, and philosophy behind achieving that, what we call social alpha, which is superior social and environmental outcomes relative to the issues you care about, right? And so, extending the analogy, Impact Shares is kind of the chef, and we bring all the right pieces together, like Morningstar, like Equileap. In fact, we found Equileap back in 2016, and they were using a group called Sol Active as their index provider. And we'd already done some work with Morningstar, and we were like, hey, you need to meet Morningstar, right? Because Morningstar is a much better organization as it relates to those two core dishes of risk and return than what they were dealing with over in Europe. So anyway, we partner with leading social and environmental organizations like the YWCA, which Jill will go into. We help them express their views of what it means to be a good corporate citizen in the social screens with Equileap. And then Equileap itself we leverage Morningstar to actually construct the portfolio so we don't miss out on the two main dishes, which is risk and return. We're just additive with Equileap as sort of the dessert sous chef. So that's kind of what we do. Jill, if you want to go to the next slide, we started the Women's Fund in collaboration with the YWCA back in 2018. As I said, since inception, it's first percentile on a large cap blend. Jill will go over sort of in some detail how the YWCA thinks of the portfolio and the criteria itself. But for us, the criteria really represents a common language for the private sector leaders to effectively engage with the YWCA on improving their relative scores. And so we really think of this as an actively managed social fund where the YWCA is not only educating the private sector, but helping them improve their scores, both relative to their competitors and relative to their historical norms, which is where the impact comes. We're not just screening out bad companies, we're identifying leaders in certain social sectors and hopefully creating kind of a horse race. So senior leaders are actively trying to improve their organization relative to these issues and be considered a leader in women's empowerment. And hopefully that being included is incentive for that engagement. And for us, the YWCA really represents kind of a sub-advisor that achieves that actively managed social outcome. And for that, the net advisory proceeds go back to the YWCA to help them fund their corporate engagement efforts, much like you would fund a sub-advisor that's actively managing a portfolio on your behalf. Jill, I think the next slide. Yeah. And this kind of shows the relationship, right? The Y works with Equileap on tweaking the social screens to more appropriately reflect the Y's views and aspirations for the private sector. Once the 200 companies are arrived at, Morningstar kind of steps in with their math PhDs and whatnot, and effectively what they do is they normalize the portfolio, and that just means making it look just like the broader market, with one exception, right? And that one exception is you're exposed to a woman factor, which is those companies doing the most to advance women in the private sector. And that all includes supplier diversity, more than just fair hiring, pay, and promotion practices. And that one factor, as it turns out, is generating financial alpha. So that dessert is very complementary to the other two dishes in JB's example of risk and return. And impact shares, we're kind of, like I said, the chef behind the scenes. We just bring all the best and brightest people into the solution and let them do their cooking. So with that, I'll turn it back to Jill to talk about how she makes the dessert.
Thanks, Ethan. Much like Carolyn needed to clarify, Morningstar is not the veggie burger company. I want to clarify that the YWCA is not the YMCA. We don't have village people, we don't have a song, but we do recognize that it takes a village to make the change that we want to see. For over 160 years, the YWCA has been advocating for the rights of women and working to eliminate racism and empower women in the workforce and beyond. And this was such a great opportunity when it presented itself to us to join sort of the work we've been doing on the ground level for all these years with corporate America and try to make the change there that we'd like to see so that we can have this continuum of women advancing in the workforce. We believe that we can't fully thrive and prosper as an economy without including everyone, and that includes tapping into an entire workforce of women. If studies have shown that companies that are intentionally inclusive and gender diverse, both in their hiring practices and their policies and internal policies and treatment of women, increase their profits and improve performance. So, this is just a great opportunity for us to put all of that work together into an investable product with the support of Impact Shares. We've been looking for ways for years to activate all levels of society. And this is just another tool in the YWCA's toolkit. Since we have launched this product with Impact Shares in 2018, we've been able to use this as sort of a megaphone for the work that we've been doing, and to talk to our supporters and our stakeholders in a different way about the importance of putting your money where your mouth is, and easy ways to do that as well, through both not only your consumer dollars, your donation dollars, but also your investment dollars. It's also given us that additional tool of in our advocacy bucket to be able to have deeper conversations with corporations about the criteria that Carolyn went into earlier, that Equileap uses to rank the companies. And these are all things that the YWCA would like to see become table stakes over time, and that we don't have 19 criteria to evaluate companies because the companies are already doing these things. Digging in, this is just a shot of the gender, the Equileap scorecard in a little bit more detail. But people talk a lot about the importance of having women on a board of directors, and that's great. But the criteria that we are using through the Women ETF goes even deeper than that, and looks at the number of female executives, and then in senior management, and then in the overall workforce, to see, how do you get from being an entry-level employee at a company to senior level and potentially on the board one day? Are those realistic opportunities for folks? Definitely the living wage is something that the YWCA has been advocating for years, and the gender pay gap. We just had Equal Pay Day last week, I believe it was, and that's how long women have had to work in the year to pretty much for free to start earning the same as their male counterparts. And then we know the importance of parental leave and flexible work options for keeping women in the workforce. It costs money. It costs companies a lot of money to have to turn over employees every time a woman gets to the family stage in her career. And we like to reward companies or shout out to companies that see the importance of keeping women in the workforce once they've started that family portion of their life. We also look at the screens also look at the sexual harassment policies in companies and the supply chain diversity. One of the things we saw is very important with this product is a lot of the YWCAs across the country do a lot of work in domestic violence and sexual harassment and rape crisis counseling. And we do a lot of that, trauma counseling. And it's sort of counterintuitive then to put women back in a workforce where there's no sexual harassment policy in place, or they're subject to, they're subject to re-traumatization. So we like that was one of the criteria that companies were evaluated against. And same with all the economic empowerment work that the YWCAs do across the country, counseling women on negotiating for fair salaries and using their voice at work, but then having corporations not have pay transparency or not have a living wage is really working against us. So in short, we saw this as a great opportunity to bridge these two together. We can have the conversations with corporate America. We can have the conversations with their employees who can look at these criteria now and say to their companies, why aren't you doing these things? Why aren't you in the index every year? And to reward the companies that are and show that, really amplify what they're doing. It also gives the YWCA an opportunity to help out companies. A lot of YWCAs across the country have different diversity trainings or trauma counseling capabilities, and to be able to link that with corporations that are lacking in those areas or small businesses that want to learn more about these things. So it's just been a great tool for us. We've also been able to, as part of our affiliation with Impact Shares, work on some shareholder resolutions, some shareholder advocacy. Last year, I believe it was, we worked with Impact Shares to file a resolution with Norfolk Southern, which is one of the holdings in the Women Fund, to encourage them to give more paid sick leave to their employees. So I believe it was 8 of 12 unions they ultimately negotiated with. Ethan, you can correct me if I'm wrong. But we were successful in doing that. So overall, it's, it's, as Ethan said, with this fund, it sort of brings along not only the financial side of things, but then also that more active engagement to make the change in the women's empowerment sphere. Anything I missed there, Ethan? Oh, and so this is yet just another slide to talk about, why, as the YWCA, we decided that this was something that was important for us to be a part of. And like I mentioned, we want to see this change. This provides a roadmap to empower women in the workforce, gives us a platform for advocacy, and we have a lot more expanded opportunities for collaboration with the private sector. And then, as Ethan mentioned, the revenue side of things, unrestricted revenue is gold to nonprofits, and that is one thing that this partnership will be, provides for the YWCA. We get the donation of the net advisory fees from Impact Shares because they're also a nonprofit, and we can, generate consulting fees from companies on these gender equality practices, and just through an expanded donor base, an expanded supporter and donor base. And then it's another way for us to just try new innovative solutions to problems we've been trying to tackle for the last 160 years. Change ain't fast, easy, or cheap. So we're trying to find all ways to make the change that we have been striving for all these years. So just quickly, our overall impact strategy is having these activities where we can educate people on the criteria, we can advocate for these things, and celebrating the companies and engaging the companies that are in the fund. And from that, we'd like to see interest in other companies in improving their scores to be part of this fund. We also want to see an increased knowledge just across the country of the fund and impact investing in general. Like Ethan said, every dollar that you spend has an impact. It's just a question of what you want that impact to be. And then we also, our investing hypothesis has proven pretty strong so far, which is the companies that do better by women in the workforce tend to have stronger financial returns. And so on the desired outcomes from all of this, we would just like to see more companies with the gender balance in the leadership and workforce, equal compensation, paid work-life balance, and their policies promoting gender equality, and then an increased interest in impact investing and sustainable revenue. So that's the YWCA's part. Oh, James, you're muted.
Thank you for that. I liked some of the analogies, and I've shared before that the YWCA did a great job of caring for my son in his preschool days. So that was a great option. And you've talked about food and dessert. So I like to look at the menu, see what's for dessert, and then take my other 2 plates, Ethan, and then eat according to how good the dessert sounds it's gonna be. So in this case, the dessert already looked pretty darn good. So thanks for letting us know all the wonderful things that you get by using your exchange traded fund.
And our dessert is low calorie, JB, just so you know. So
ooh, I can eat 2 then. So this is just to quickly show you that if you do work with Envision, we use Charles Schwab as a custodian. This is how where your money would be custodies or held, and just quickly highlighting that they also have a NAACP minority empowerment ETF as well. So now I'm going to transition to a little bit of the Envision Justice story series. So I created the Envision Justice series a few years ago with the idea of incorporating women's empowerment, racial justice, and climate justice all in one package. And actually doing that through either mutual funds and now exchange traded funds inside of that, or doing it through my partner Ethic, which I'm glad that we found Ethic. So in transition to kind of showing you Ethic, similar situation, you'll see Charles Schwab and how this all flows, and Ethic as the investment provider. In this case, I direct Ethic in terms of what indices that I want them to select the stocks from, but then they do their wonderful work in selection. So you're going to find out today that they take a bit of a different approach than what you've heard so far from Morningstar and Impact Shares.
Awesome. Thank you for that introduction, JB. And thrilled to be with everyone else today. In the same vein of names getting confused with different names, my mother thought that I worked for Epic for the first 3 years. And so although I do think our solutions are epic, we have a code of ethics here for investing at Epic. And excited to tell you all a little bit about it today. Carolyn did an amazing overview of what makes direct indexing and separately managed account offerings unique. And we are another direct indexing offering. So going to share a little bit about that personalization available to you. Similar to some of the other conversation here, Ethic is a firm solely focused on moving us to a more sustainable world. And what you'll see here is a lot of what we've talked about today is kind of the underlying investments and what's going on in the investment criteria. And I'll get into that in a second for Ethic. But we also think it's really important to utilize our technology to help advisors like JB and investors like yourselves engage with your investments and be able to understand them a little bit more deeply. 2 principles that are really important to Ethic are education and transparency. So one of the technology tools that are highlighted here on this slide is our health check. And it's a diagnostic that JB can help you plug in any existing investments that you have today and see how aligned or not aligned they are with the values utilized in the Envision Justice series. So that's just one item that's available to kind of start you on your journey if you want to move towards a more focused women's empowerment portfolio. JB, if you want to jump to the next slide. This is in here as an intention to help illustrate the direct indexing offering, which Carolyn already did a great job of. I think what's important here is, I mentioned already, we're really focused on customization or personalization and transparency, and that's exactly what direct indexing offers. So we work with JB to determine what index makes the most sense for your specific portfolio, whether you're focused more on a US exposure or a global exposure or some other type of factor, including growth or value through that. We work with James to also define what sustainability preferences make the most sense. Today, we're here to talk about women's rights specifically. And then we essentially take those investments through a filter, if you will, to determine if companies are or are not aligned with your values, ultimately getting you to a portfolio that's really well diversified, but full of values aligned names. In that final portfolio, something I think that's really important as well is we really see that no public company is perfect in this space. And so we do a lot of shareholder advocacy and proxy voting on behalf of the investments that you do hold in order to continue to move those companies that you're invested in to an even more socially responsible behaviors. JB, if you want to drive forward. Awesome. So we've, as James mentioned, we've worked together over the last couple of years to define a strategy that's uniquely available to Envision Wealth clients. And that combines 3 values that are incredibly important to the clients that often come to JB looking to invest differently. And those 3 are equally weighted within the Envision Wealth Justice series, including climate justice, racial justice, and what we're here today to talk about, women's rights. So we'll spend a little bit of time on our focus there. What you can see here on this screen is some of the data that's included by investing in this type of portfolio and highlighting a focus on women's rights. As we've talked about so far, there's many different investment criteria that asset managers can use to evaluate individual companies and their behaviors, and if they're aligned with a portfolio focused on women's rights and gender equality. What you'll see here that I think perhaps maybe feels a little bit more unique or a little bit different from what we've talked about so far is that we include focus areas around a lot of environmental considerations and considerations of women as consumers at Ethic as well. So we seek to take a very global lens on all of the different ways that individual company behaviors can impact women, to protect women's autonomy and to remove barriers to women's participation in all aspects of society. So we find that the equality of women in the workforce is remarkably important, and we include data points in regards to that. But we also seek to include data points as women as consumers and how public companies can also impact the environments surrounding women and their families. And so those are a few of the data points that you'll see highlighted here. Digging into that more specifically, on the women in the workforce side, we consider both where the gender breakdown is of the workforce today, as well as policies and practices that are in place to ensure that that diversity stays or grows at all different levels of the organization, as both Ethan and Carolyn and Jill talked about already today in their portfolios as well. One of the parts that's really important to Ethic is to play back to the client, to you as the investor, where your portfolio sits. We really seek to, at both kind of the time of initial investment and on an ongoing basis, measure the impact that your portfolio is having relative to being invested in an index fund, in order to really hold ourselves accountable as your asset manager on behalf of Envision Wealth, to demonstrate the difference that we're making. So you'll see here that we're looking at gender diversity at 3 different levels of the organization. There's so much interesting research about the importance of gender diversity at all levels in order for women to continue to have high retention rates and also be successful in individual companies. So we find all 3 levels really important for evaluating if companies are upholding this principle. We also look at not just the equitable conditions today, but also policies and practices that companies have in place, whether that's flexible working schemes to allow women more flexibility with work, diversity program targets, gender pay disclosures, and even some companies offer daycare services today, and that's important to us in our evaluation of how they support women in the workforce. GB, if you want to drive forward. Awesome. I mentioned already, we think it's also really important to consider women as consumers of public companies, whether it's utilizing certain service platforms or buying certain products. And so what you'll see here is one of the areas we evaluate is product quality and safety, and more specifically, data privacy concerns. So any companies that have had specific data privacy issues in the past, we really see that as important for evaluating, because women are more likely to be subject to online harassment for data privacy breaches. And so we evaluate companies based off of their having had data privacy issues in the past. So a few companies you'll see here that are actually excluded from the Envision Wealth Justice Series portfolio based off of that data point are a few names you'll notice and or you'll likely know. We do hold these companies accountable typically for a year or two, and then evaluate them on an ongoing basis if policies or practices have changed, if any kind of additional issues or settlements are going on, or if leadership has shifted, in order to not hold them in the doghouse forever. But we do think it's an important consideration when thinking about women's rights specifically. And then finally, if we want to move forward one more, perfect. I mentioned the environmental considerations. Women are often disproportionately impacted by hazardous waste, by air pollution, and by emissions worldwide. And so we look at several environmental considerations as a part of not just Envision Justice as a whole, because of the climate change pillar as an important part of this strategy, but also specifically within the women's rights pillar, given the importance of that to women's barriers for success. So you'll see here that once again, we're measuring that impact, and we play this back to you on our fact sheets and on your ongoing reporting alongside your financial returns, to have impact-like returns, to be able to see what your portfolio is doing over time. So have both a carbon emissions and a hazardous waste impact metric here for you to take a look at. But that's all I had for you today about ethics, Envision, and our partnership with JB on creating the Envision Justice Series portfolios. I think what's really exciting about hearing from everyone today is we're all seeking to move the needle in the same direction. And it's really incredible to get all of these people together during Women's History Month to talk about all these different ways of approaching impact and seeking to further women in the workforce and outside of it through investing. So thank you so much, JB. I'll turn it back over to you.
Thanks. And well, Corrinne is a return guest. So she has been on a prior, so you could actually, go back and listen to that one and hear more about the ethics story. I will say that there's a minimum of $250,000 for the ethics solution. They have another one as well, but let's say 250,000. And that it would be in all of your equity or stock side. But inside of that, we do offer international or foreign diversification. So it's not just a US based strategy. But when you work with us, we have ways, depending upon your investable amount, to give you, a even broader diversified portfolio with bonds, et cetera, should that be what's called for. And, I think that each one of the solutions that we have talked about today were all intended to be something that, depending upon you, that we generally have an answer. So, but we just wanted you to know that there are lots of answers out there, and that you don't have to feel that you have to automatically feel that I have to give up return in order for that to be the case. I'm gonna fly ahead a little bit here. So we use another company. I'm gonna for some of our research when it comes to screening for values. We also use the sustainability ratings for Morningstar, so we kind of get a double hit. But there's another one called Your Stake, and with Your Stake, they have some standard metrics, but we actually created our own metric set regarding women's empowerment. A few on here might be controversial. You may have the opposite position, but we can actually go and tweak and tune it to have a more customized set for you. And then I'm going to show you a comparison to one of the Vanguard funds and the prior month's webinar where we talked about racial equity. I went deeper into the why of the why compare against Vanguard, and that's generally because it's a straight index. There's no thought regarding what to screen out for or what's screened in. It's really by size of company. But I thought that by using the Women's Empowerment ETF, which was an easier comparison, but the direct indexing version is basically the same thing, compared to the Retirement 2050 fund. A lot of people are getting defaulted into a target retirement portfolio. Often it sounds like, hey, target retirement 2050, that's what I'm targeting my retirement. Sounds like a good choice. But what's inside? So today we saw lots of transparency in terms of what you actually are invested in. And even in Corrinne's slides said, this is why some of these aren't included. So that's really high transparency. But you don't get the same transparency with that target retirement 2050, what's inside of it. So just by kind of show, you kind of see that the world of positive goes to the right-hand side where we see the ticker for WOMN. And this one really kind of blew me away. Best companies to work for and best places for women scores in comparison to that target retirement 2050. So you may want to vote your interest in this particular case, or invest your interest, or let's talk to your 401k provider or your company as to how can I get some of these things on my platform when these other things don't seem like they're helping me vote my interest. So we always like to include something at the end and say, hey, how can we take what you've learned today into action? So one way is to use your stakes portfolio comparison tool. I did that same 2050. You can kind of see the results on here with the greenish color being the YWCA, and hey, Ethan, that might be what you expected, huh? When he's trying to say, Carolyn was being too nice earlier. She didn't want to say how that it's really kind of blowing things away. So, but it's okay. We got the story out there anyway. But I always have to say, future returns may not be the past, but things look pretty good so far. A bit more volatility. I wasn't trying to find the ultimate perfect comparison. I was really just trying to educate you and to have you think, hey, what's inside of what I own? Let's learn if we possibly can. So kind of coming to the end, you can use the QR code or you can email OPS and for this portfolio checkup. If your size of investable asset is, let's say 250,000 or more, we would then use the ethic tool, which is a little bit different, but it goes towards the same end goal. So that said, I know that there may be some questions. If JD Barrow could let us know if there's any questions that we might try to answer.
Well, I think the presentation today was such a success because there are no questions this time. If we do get any questions and follow-up comments to social media posts or anything like that, we will try to gather everybody's expert opinion and get that feedback to everybody. Thank you all for coming and attending. As some of you know and some of you don't, this is an ongoing monthly series webinar that Envision Wealth Planning does, thanks to James Brewer's efforts and all of his amazing friends that he likes to collaborate with and experts in the field. And if you register for any of these, you will get a recording invitation at the end, as well as some follow-up emails and reminders, things like that. Next month, we are going to be doing a webinar on planet protection, continuing our series of values-based investing. Last month was race, as has been mentioned, and happy Women's History Month to you all.
Thank you.
All right. Thank you, guests.
Thank you.
Thank you for having us.
Oh.